Hi, welcome to the Market Alert for Friday, the 11th of November 2016. So yesterday we see the market putting in a new all-time high, which has already been broken in the overnight market. I'm starting with the daily chart today, just so that we can look at the background of what's going on. And again, as I said in yesterday's Market Alert, I expect this to continue to the upside as well. They're really going to take advantage of this while Obama remains in power. And interestingly enough, there was an article on Zero Hedge that actually said more or less what I was saying yesterday, and that's he won because the elites want him there. The global economy will collapse. And that's exactly what I was saying yesterday. This is going to be fine and dandy for the remainder of Obama's tenure as president, but as soon as we get the handover, and if Yellen raises rates in December as well, which she's likely to because she's not going to get a second term, it doesn't matter then, the whole of the financial mess will fall on Trump's shoulders. And that's why you're seeing the market move higher. It also gives the traders a chance to grab a bonus, a last decent bonus as well, by moving the markets to the upside. So we're back again at all-time highs. As I actually record this, we've got a high in for today so far. Let's just move this one out of the way. Let's just remove that. So 18,889. So we're just close to 18,900. 20,000 wouldn't be impossible for this market. It's been the figure that they've been chasing for a very long time. So it's long. But again, after the volume of Wednesday, following the elections, you've got an increase in volume. There's no doubts about that. Whether it's buying or not, who knows? But again, when you look across to the quieter time, it's not that much greater. So again, we've just got prices being marked up, and for the reasons, of course, it gives the elites chance to take profits out of the market as well as the market moves higher also. So yesterday's trades, well, there was nothing in the first part because the range of the bars are outside of the 25 maximum. You can change this, as I've said before. You can increase this to 40 and you will see the signals appear. But for me, the volatility is so great in that first hour at the moment because of the change in presidency and the election and everything else that you're risking too much to actually take the scalp. It's okay if the market continues thereafter. So that's not for me, but it doesn't mean to say you can't do it. I mean, you can see here there are winning trades, but you are risking 70 odd points for 20 points, which doesn't make sense. And the same there, you've got the market trading to the downside. Yeah, it's a 100-point range, so you know the volatility is there, but you've just got to be think about what it is that you actually want to do. Whereas when the default settings, we've just got a nice steady trade here. Late on in the session, we get the signal and we get the market trading up for 20 points. And if the market's long, blimey, that's a Freudian. Trump's coming in, they're ramping the market, so you can actually stay on the long side, and you can see the short side's failing here as well. So by keeping it set to the 25-point range, you're going to be switching sort of ends of the day at the moment because of the volatility as the market digests the Trump victory, and then the market trading sideways and then before the close, and then of course, as just shown you, the market going on to make a new all-time high in the overnight as well. All you need is just the one trade, profitable trade. As I said before, if you get the first trade in the first hour, call it quits. At the moment, it's switched to the evening session because that's when the volatility levels drop down to the default settings within the software. And it's there to be seen. You can see we've got ranges here of bars of 60 and 70 points, and you can see this one here, that's certainly 50 points plus in that range there. So it's down to the individual. Some people like to trade the volatility when it's like this, and others don't. And if you're new and you want to preserve capital as well, then just trade the sort of it's going to switch from the first hour or two to later on in the session. You can see the range of the bars actually getting narrow because you've got this fight over, which you see in the first part of the market. It's up, then it's down, then it's up, then it's down. Eventually, then it can break back to the upside. So you just don't want to get involved in the fight, really. It's unless you're of that persuasion, I suppose. News-wise today, what have we got? Bank holidays in France. Fisher's going to speak, and we've got the prelim consumer sentiment at 3 p.m. which is a high-impact news item, but generally doesn't affect the market, but it depends how it comes out. It's forecast to come out slightly lower, and as we all know, bad news is good news at the moment for the market and tends to go to the upside. Likely to finish the market on a high this week as well. So Deutsche Bank, talking of highs, is coming back nicely. You can see how it's taking advantage of the last month or so of Obama being in. This is moving up very nicely, but again, wait until January and see what happens here. We always get this with Deutsche Bank. They still haven't paid the fine. They're still being fined for other things as well. So it's just a matter of let's have a quiet, calm Christmas, shall we? And then in the new year, you will see the carnage. 1184 on the implied volatility, which you'd expect as the market's moving back to the highs. This is also good news. Very good news as well, because this is if this goes back down towards the 10% area or lower, then we are going to see a major correction as well. So it's all tying in quite nicely there. Right, that's it for this morning. I will see you in Monday. So as ever, thanks for your support and also for watching. I'll let you know if there's anything going on unusual that needs reporting on. Thanks for watching.